Deputy McNamara, you have 5 minutes. Thank you.
Professor Kinsella, you were quoted in the Clare Champion a couple of weeks, maybe almost a month ago, as saying the V-shape is looking very aspirational at this point. The Department of Finance say that in 2009 GDP grew by 5.5%, this year it will fall by 10%, and next year it will grow by 6%. That's a V-shaped recession. The chances of that happening seems to me to be seems low to me, but anybody that pretends to know it, they're talking out of their hoop. Now that's I just wonder, is there any more information at this stage that you might make predictions based on?
Well, I think the most important thing, and perhaps less colloquially than I might have put it to the esteemed journalist, the Clare Champion, is that we exist in a high degree of uncertainty. So, which is why scenarios are developed instead of forecasts, because quite simply the models won't work for the amount of uncertainty that we've got. I think when you see a situation with this much uncertainty, it actually behooves the state to step in to try to reduce that level of uncertainty, which is why we're all talking about this activist fiscal policy. But the other kind of major point about this is if we have a situation where it's a V-shaped recession is looking unlikely, we have to study the risks that it may be a longer running recession. It may be U-shaped. There may be sectors that are deeply damaged. And frankly speaking, we don't know, which is why in my written submission, I argued, I hope strongly for a very strong research response to what exactly those risks are.
Thanks. And just to both ESRI and Professor Kinsella, what impact will bank lending practices have on what happens now and what type of a recession, or whether we have a recession or not? And are you seeing any changes or trends in bank lending practice? I mean, anecdotally, I'm hearing a lot of stories about loan offers being withdrawn, but that's anecdotal. I don't have anything concrete in that. Do either of you have anything concrete? Firstly, and even if you don't, what impact will bank lending practices have on?
Just a quick answer. We certainly in the Institute we haven't done any formal analysis of this, but your question really does bring me back to the economic crisis of 2008, 2010, where of course bank practices at that stage. Now there was the discussion, you remember it well. There was a very sort of thin flow of credit, and there was this discussion. Well, was it the supply side or the demand side? And that eventually worked itself out. But there's no doubt, and this is partly related to government policy, that the proactive lending by banks into the economy is going to be a very, very important part of the overall recovery. Now, obviously, banks are businesses and have to show degrees of caution, and we know that's very, very clear. That does again, of course, then bring up the importance of state guarantees around these sort of loans. But it is a really critical dimension. And again, just to say of Ireland, we still seem to be a bit unusual in that the reliance on small and medium-sized enterprises for finance is still very bank-oriented. A lot of other countries have moved. I know there was a lot of effort in the last number of years to try and move the model away from being so bank-focused, but I don't think we're anywhere far along that particular road to say anything other than banks are going to be critical. Okay,
and Professor Kinsella, something to add to that, then?
I think it comes down to turnover, right? So a business isn't going to take out a loan if it's not sure that it can service that loan. The bank is similarly going to have a concern over whether a firm that has demonstrated obviously very low turnover in the last couple of months is going to be able to service that loan, and that the intermediary between the two is the state. The question is, what is the appropriate design of those guarantees? And here, actually, Germany is a very good example, but across the OECD, there have been lots and lots of, if you like, credit guarantees and credit injection programs, some of which have been very extensive, actually. And so I think we could benefit by looking at those, but with the proviso that firms don't know what September, October, November is going to bring in terms of their turnover, and so therefore they're going to be very unlikely to want to take out loans unless they're in some sense guaranteed by the state.